dividend revenue, because that is the missing information that we need to record it. Done. The second one is 2100. Bank collected account receivable. You collected cash 2100 from your customer. What is the entry? Cash to account receivable. All right. Interest revenue. You receive interest revenue 30. Cash to interest revenue. All right. Correction. So when you write it down, the check, you write it down, or you deduct the cash. Wait a second, what was that? I forgot the statement here. The statement is here. You recorded check number for 510, the amount you actually paid on account, which means account payable, 150. So when you record this, you record it as account payable to cash, and you recorded 510. Instead of writing, but you on the check, you write it down 150. But mistakenly on accounting system, on cash record, you write down this entry. Paid cash 150 on account. So cash decrease, liability also decrease. But now 360 worth of amount, the difference between 150 and 510 is 360. You need to add back. So entry gonna be reverse here. It's gonna be cash to accounts payable. Right? And you write it down, this is the correction, because you don't receive cash from your supplier. You pay cash to your supplier. But in this case, because you make a wrong entry, then you make reverse entry. Okay? And the third last is service charges. You pay service charges to the bank, expense to cash. Service charges or banking expense to cash. We have here miscellaneous expense. You can also write down the banking expense, banking service expense. NSF check, which means customer paid you and his check is now bounced. When customer pay you, you write down cash to account receivable, 50/50. But now cash is bounced, cash is not received, you make a reverse entry, account receivable to cash, 50/50. Right? Electronically funds transfer payment of insurance expense to cash. Is it hard? Oliver, David, understand?
Yeah, understood.
Joao Paulo, Marco, Miria, Nana, PD, 10, Venetia.
Yes, sir.
Momo, understand?
Yes.
Right?
Yes, sir.
What you have to do, you have to make, first of all, bank reconciliation statement. And on the cash side, because these are missing on your book, on your record, so you make the entry. And that's it. So remember, I have a summary for you. If you don't understand, just remember that one. On the bank side, you add all the deposit in transit, subtract any outstanding check you have, and add or subtract the errors made by the bank. That's it. On the book side, on the cash record, you add collection revenues, any kind of dividend revenue, interest revenue, and ETF receipts. And you subtract service charges, the non-sufficient bounce checks from the customers, and EFT payments. Okay? And the last one is add or subtract the correction of book errors. All right? And then you take the book balance and start making the entry. So why we are not making entry on deposit in transit and outstanding checks? because this is bank side. So this must be handled by the bank because this is bank own internal matter, not our matter. Our matter is related to book side that we are maintaining the T account of cash or ledger of cash or cash book. All right. Okay. Any question regarding this
No.
here? So remember, let me explain one more time here. Here we go. So how we make the bank reconciliation? Similarly, you can also memorize this stuff as well. But if you go for logic, you don't have to memorize the stuff. So on bank balance, what is missing? Deposit in transit because check need time to clear. Any correction? Less outstanding checks, which means company write down the checks, but bank didn't receive it. That's it. And then on cash side, on cash balance purge books or on cash account, what is missing? So you saw the bank summary, any kind of receipts that you didn't write it down or didn't record it. For example, electronically funds received, interest revenue, dividend revenue, bank collection on from the customers on your behalf, and less any kind of payments that you didn't write it down. Number one payment is bank service charges. Number two, any electronically funds transfer of payments like insurance, salaries or something if you gave right to the banks to just issue payments on your behalf. And this one is very important, the NSF check. Which are the checks written by customers and you receive it. But find out, and you found out that those checks were bounced or don't have appropriate balance, so the bank returned it. So bank did not increase your cash balance, so you must decrease that. All right, and at the end you take this side. Remember, bank and book balance must be equal, and when it is equal, then all those missing information that you write it down here, you must make the entry. So that's why here, first of all, EFT is receipt of dividend received, which means received. That must be the case of revenue. All right. So what is your entry? Revenue increase, credit, cash increase, debit. Debit to credit entry going to be cash to dividend revenue. All right. Now 2100 bank collection of account receivable. Account receivable paid you. So you receive cash from the customers. Cash increase, account receivable decrease. Cash to account receivable. When asset decrease, credit. Asset increase, debit. And then error, interest revenue. Similarly, cash increase, revenue increase, credit. And this is because of any kind of correction. So cash to account payable, because previously you make the wrong entry by charging account payable to cash 510, 510. On cash side, you paid more account payable. Now you are correcting it by receiving the balance, make a reverse entry so that the difference is going to be only 150, not more than that. Okay. The next one is the payments. So service charges, you pay to the bank service charges. You call this banking services expense or miscellaneous expenses to cash. Bank service charges to cash. Non-sufficient funds. So when you receive the check from customer, you write it down cash received from customer, account receivable. But now the check is bounced, you make a reverse entry, account payable to cash. Okay. Now EFT, payments of insurance payments, bank paid on your behalf. So you pay insurance expense to cash. Simple. All right. So this is basically the summary of bank reconciliation, what you have to do on bank side and what you have to do on book side. On the book side, you only record it through entries. That's it. Any question? Oliver? Joao Paulo?
No,
David?
no questions.
Marco?
No questions, sir.
Miria? Momo?
No questions, sir.
No questions, sir.
Benicia? Noon?
No, sir.
No, sir.
Nana? PD? Priscillo? And 10.
No questions, sir.
Okay, so I will be uploading this PPT plus the book chapter on our WeChat group and our Blackboard. And remember, our exam is on 6th of November, right? 6th or 9th? I think 9th of November. Let me see the date one more time. It's 9th or 6th? Yeah, 9th of
I
November.
think it's the 9th, sir.
Yeah, 9th. 9th of November. Please do not book any commitment on 9th of November. Because there is no makeup midterm exam after that. So those who are watching this online, please ask leave or arrange anything between this class timing that you need to take the midterm exam. Okay, so see you next class. Have a safe weekend, nice weekend. Take care. Bye bye.
Thank you,
Thank you,
sir.
sir.
Thank you. Have a
Thank you,
good
sir.
day.
Bye-bye. See you next week.
Thank you, sir.
Thank you,
Thank you, sir.
Bye bye. PD, any question? Okay. Stay safe. Bye bye.